say debt. Yes. What do you think is the most likely way that debt crisis will play out in the coming years? I'm going to start with different types of debt. So first, I feel like that question is due to the national debt. We have, $37 trillion of national debt that is based off of when we spend more money in a given year at the government level, we call that a deficit. And we finance that deficit by issuing bonds. We buy bonds, you buy bonds, your 401k buys bonds, your pension buys bonds. Your cousin in the Philippines buys bonds. Everybody buys bonds, and so buy U.S. bonds. And so we owe ourselves and the world money that they've raised in the form of bonds that we have to then pay back. And when we add up deficit after deficit after deficit, that sum total is what we call the national debt. And our national debt is very, very high, and it's a drag on the economy. And we have to figure out a way to get around this. So we have to grow into a position of government surpluses over government deficits. And I see my crystal ball is showing no way forward on that front, especially since we're very keen on lowering or keeping taxes about the same or lowering them, as well as at the same time, not necessarily making government operations more efficient. So we don't have a way forward here with making that happen. But I think the good news is because of the United States, although we have an immense ability to shoot ourselves in the foot, really as good as any nation on the history of Earth has ever shot themselves in the foot. I think we've got a couple decades before that plays out. Now, at the consumer household level, let's unpack this a little bit. So this is some data about the percent of balances right now among some major forms of debt that consumers have that are 90 plus days delinquent by loan type. That is basically considered an unrecoverable debt. And that's by this point, by even then, the creditors are calling you, and the companies that the creditors hired are calling you, and they've even given up. They've lost their will to live because after 90 days, you're not providing them anything. And at mortgages and other things remain very low because mortgage rates in general were so low for so long. A lot of people still hold on to these. Same with home equity revolving. Those loans are historically low default rates, and they've risen a little bit, but nothing to lose sleep over. Auto loans are a little bit of a concern. About 5% of these loans are 90 plus days delinquent, particularly in the subprime auto loan market. Of note, student loans, which of course were paused for a couple of years from 23 to 25, have since come back online, and a stunning 10% of people are heavily delinquent on this. And the downside is, as President Trump has indicated, desire to garnish wages at all with people who are in this position. Unlike other forms of debt, this cannot be discharged in a bankruptcy. We're trapped with that. And so that's a very difficult thing to address. And I'm actually worried about that for a generation of folks graduating right now. And credit card debt is, again, it's hovering. It's not skyrocketing, but it is at a level which is uncomfortably high, indeed very close to where we were back in the 2008 financial crisis.